Okay, hello again. We are on page 2, and we are doing the Whispering Winds example. So you've all looked at it again, you've kind of thought where it belongs. So let's go through and put this together. So don't forget, on your statement, you always need a title. So Whispering Winds Company. And we're doing a statement of comprehensive income, or CI. And it's a period of time for the year ended December 31st, 2020. Okay. So this is a period of time because it's telling us what you earned as a company. So if I said, I made $1 million, is that good or bad or otherwise? Well, I made it this year. Maybe I made it over 30 years. If I don't tell you the period of time, it's kind of useless. Okay, so let's start our statement. We start with net sales. And that's going to be 1.21 million. Next we have cost of goods sold, 756,250, which gives us 453,750 called. That's the gross profit or gross margin, whichever you want to use. Which brings me up to a point when you're doing questions on Wiley Plus. Sometimes the account names don't match exactly. So let's say you'd been using gross profit and maybe some of the examples in the text use it, and you get to Wiley Plus and there is no gross profit. Well, look for the next thing that's the same, that means the same, gross margin. So you'd use gross margin. 316 gets worse for this, if you can imagine, but remember, everybody's accounts, there isn't one big, huge set of accounts that every company follows using IFRS. No two companies are going to have the same set of accounts. Okay, maybe it's smaller ones that start with simply accounting or something, and there's already a list set up, but you're not going to see the same accounts. So you have to understand when you're doing entries, which we aren't in this chapter, I know, but when you're doing entries or making statements, you can't just memorize the words. You have to understand what it means. Are they liability? Are they a revenue? Are they some kind of summary account? So even though you can memorize it, in reality, in practice, you're never going to see the same kind of accounts. So get used to being flexible. Okay, that's my little lecture for that. So we've got our gross profit margin. Then we've got our operating expenses. So operating expenses, they have selling and admin. And they tell you it's 317,000. So they lump them all together. Sometimes they'll separate it into selling and then admin. It will vary, so you have to get used to that. Now we need income, because this is all operational stuff up here. Income before other revenues and expenses. So that works out to 136,750. Now we have other revenues, expenses, gains, losses. And that's a gain on disposal. It's got to be separated because it's not part of our business. We're not in the business of selling buildings, because then it would be cost of goods sold. So gain on disposal, and that's 268. Remember, it's positive because sometimes these can be losses too. And that gives us 404.70, and that is our net income. So now we need OCI, or other comprehensive income, because we're doing a statement of comprehensive income, so we include it. And that's our unrealized gain on FVOCI investments for 21,000. Now it's a gain, so we're going to add it to get 425,750. That is what's called comprehensive income, or CI. And that is the basics of a statement of comprehensive income. So all this stuff I've known already, it's this piece that we're adding on here. And we'll talk more about where these come from, but they're generally gains and losses, and they have OCI after them. That they all go down here. Okay. So, we'll learn about why they go down there for now or later on. Right now, just remember, if it's OCI, it goes in the OCI category. And remember, ASPE doesn't have OCI, so ASPE will always end here. Okay, let's talk about discontinued operations on page 3. So, discontinued operations include parts that have been disposed of or are held for sale. So the minute you officially hold something for sale, it would be a discontinued operations. So the components under ASPE are an operating segment, a reporting unit, a subsidiary, a certain asset group, or operations without assets. And you can read in your texts for some examples. Under IFRS, separate major line of business or geographical area of operations, or a business qualifying as held for sale. So they're a little bit different. Under ASPE, an operating segment, so a piece of your business that you want to sell off. Let's say you have a gym, you own a gym, and you own a fitness store, fitness apparel store. An operating segment would be one of them, and so would a major line of business. Okay? Subsidiaries, you don't even know what they are. It's a piece of a company you own, more than 50%. Asset group. So let's say you had an investment arm of your business, that would be separate. Could be under discontinued. Under IFRS, they're more specific. Because discontinued operations don't show right in your net income, some people would like to hide it under discontinued. However, IFRS doesn't allow that. So it's got to be separate major line of business or geographical area of operations. Okay? So if someone is closing off all their Canadian stores from the US, that would be a geographical area of operations, so it could be listed in discontinued operations. So your text discusses what is meant for held by sale and the rules to follow. You can read that. Discontinued operations are listed in a separate section of the income statement and our reported net of tax. Okay, and I'll tell you why when we do the example, why they're net of tax, or I'll illustrate it. So, given the following information, prepare a portion of the income statement beginning with income from continuing operations before income tax for the year ended December 31st, 2020. So, we're going to start from income from, and I left space there on purpose, continuing ops before tax. So this is all the stuff that's going to keep going. So we'd have our little title, we'd have revenue, expenses, other, revenue, expenses, gains, and losses. Then we'd get income from continuing operations before tax. Now they told us it was $5 million. So now we take the income tax expense, and they said it is 30% times the 5 million is 1.5 million. So income from continuing ops, and that's after tax, is 3.5 million. So, if there was no discontinued items, this line, net income. So you notice it changes depending on what you have. So we've used this. We've used the income tax rate. So let's look at these three things. We notice this is from discontinued operations, so it's going to be discontinued ops. This is going to be discontinued ops. Now, unrealized loss on investments net of tax. We know this is OCI because, so we know it's OCI because it would have been included in the 5 million otherwise. So this one's OCI. So we're only doing the income statement, not OCI, because that would be comprehensive income. So we need a discontinued operations section. So discontinued ops. So we're going to use both of these, and we have to take the tax off. The reason we have to take the tax off is here's income tax expense are down here, so they won't already have their tax off. It's only the 5 million. So we have to take it off here. And same with OCI if you were doing OCI. So we need to know our tax for this gain and this loss. So 30% of the amount is tax. So we say gain from discontinued ops net of tax of 30% times 520 equals 156,000. Now you don't have to show the calculation there. You just have to show the 156. I just put it there so you know. So you take 520 minus 156 and you get 364. And it's a gain, so it's positive. Make sure you keep track of what's positive and what's negative. Then we have a loss on disposition from actually selling the assets of your discontinued operations. Net of tax recovery, because you get some back on a loss, which is again the 680,000 times 30% gives us 204. So this time we have a negative 476. You can also show it with brackets, okay? But don't show both. So that's just our 680 minus 204. Okay. Then we take our income from continuing ops, so continuing, everything that's going to keep going, plus this, minus this, gives us 3.388 million. And that's our net income. Now, if we had been asked to do a statement of comprehensive income, we would have our OCI section, and they would be after tax. And then we'd have CI. Then, at the very bottom, we have earnings per share. Okay, so this is an illustration of how to do an income statement, or statement of financial performance, starting from the continuing ops. So we're really illustrating how discontinued ops work. And hopefully that makes sense. Any questions on that? Okay, I'm going to end recording here, and then we'll move on to a completed statement so we can see a big multi-step statement.